Hi, this is Zach here from Zach's Traders Cafe with a look at some bulletin board hero stocks on Wednesday the 4th of May. Starting off with Avocent Mining, where it's a bit of a lap of honour as far as the bulls are concerned. The shares hit the top of that rising trend channel from the beginning of last year, just under 11.5 pence yesterday. The view now is that with the stock really overbought, we're looking for a retracement, probably back towards that old initial 2015 resistance around 8 pence, which would be the notional buying zone. Stop loss at the moment back below the bottom of this gap, 6.95 pence. So that would be a reasonable risk reward for chasing 11 pence plus after buying around the 8 pence level. Next up, a stock which was apparently very popular last week at an investor show, Ariana Resources. Here we've got a V-shaped bull flag after a rebound off the 10-day moving average at 1.49 pence. That should allow the stock to head yet higher. 2 pence has been the notional target here for quite a while, and that should be on track, at least while there's no end of day close back below that 10-day average zone. So above 1.5, still up to 2 pence for Ariana. Now a stock which I haven't covered for quite a while because it's been looking rather weak or grim, but Mariana Resources recovered basically from the start of the year with this consolidation at and around the 50-day moving average, then towards 1.5 pence. That was really the start of the whole process. Since then, it's been a consolidation again either side of the 200-day moving average, now 1.89 pence, but a golden cross between the 50-day and 200-day moving averages, and all the other main moving averages rising as well, including the 10-day line at 1.98. Bull flag breakout for this week, and even though we're up quite a long way already, 3.5 pence is possible at the top of this rising September trend channel. Stop loss at the moment back below 1.85 pence, and any weakness towards the 2 pence zone currently regarded as a buying opportunity as we chase 3.5 over the next couple of weeks. Orican Gold, another big favourite at the moment for some reason, don't know why. Golden cross buy signal at the end of April there, so that helps a lot. V-shaped bull flag breakout, then the consolidation above the old 0.19 pence resistance for the end or the turn of the month. Current position is that we're looking for the shares to head higher towards the top of this rising trend channel from April last year at 0.32 pence over the next 2 to 4 weeks. Any dips towards 0.2 at the moment regarded as a buying opportunity, and really well below 0.19 delays the upside scenario. Moving along to Stratex, which has been a favourite of mine. You'll see why in a second. Hopefully this gap through the 50 and 200-day moving averages seems to be quite compelling. If you're a chartist, holding that previous resistance, which was 2 pence going into March, as new support, and holding that gap as well. In fact, there was a failed gap fill attempt at the end of last month, so that's extra bullish. So looking for 3.5 pence here as the upside, while there's no breakback below the 2 pence level, and possibly much more given this very strong setup with the gap through the 200-day line. Only a gap down really obviously would be the upset for the bull argument at the moment. Another stock which catches the eye at the moment is Petroleum. Here we've got a situation where got a bumping along the bottom type of narrative for the technicals. Want to see an end of day close back above the 50-day moving average at 0.33 pence before getting confident that we can head up to retest that March 0.6 pence area. In fact, if you're very cautious, you might want to wait for the 200-day line at 0.41 pence to be broken before pressing the buy button again. Favourite stock of mine, dipped by quite a margin at the moment, is Wishbone Gold, where there's been this sort of clean breakthrough, a bull flag above the 200-day moving average, and then a V-shaped bull flag breakout coming through for now. That suggests that we should at least get 0.8 pence over the next couple of weeks, maybe sooner, and if we're really lucky, then the shares would hit a trajectory which is derived from that June resistance line projection up to 1.5 pence. But at least for the moment, up above, while above the 10-day moving average area of 0.44, looking for 0.8 pence over the course of May. Final stock here, Extract Resources, which has been a bit of a longer play than maybe most of us bulls would have wanted. Here we've got this low 0.15 pence for December. Bear trap rebound from below it for the end of March, which is encouraging. And now just trying to nudge through the 200-day moving average at 0.22 pence again. In fact, it looks as though with this early break of April resistance at 0.2 pence, we've already done the job as far as having a buy trigger there. But you might want to be waiting for at least a weekly close above the 200-day line before getting enthusiastic again, given that we had that initial 2016 fader at the 200-day line. But this looks like a bear trap rebound within a broadening triangle, and we should hopefully on this occasion, maybe on a 2 to 3 months view, get the 0.4 pence target that we've been promised for so long. Only back below 0.17 pence currently, a slight red flag as far as delaying the upside yet again. That's it from me. More updates at the same time tomorrow.